Welcome to Technical Market Insight, the stock market commentary, where we give you the real information you need, which is what is going on in the stock charts, right? A lot of these other commentaries, they will gas you up at the top of the rally when you should be locking in profit, and they will bloat you full of fear at the bottom of the pullback when you should be taking advantage of buying opportunities. Plus, a lot of these stock market commentary sites and shows are just, people sound funny. Anyway, let's take a look at what is going on in the charts. Looks like Dow Jones is trying to creep back up. We'll probably try to break the 200-day moving average and hopefully hold it. As you can see, it's coming out of the oversold territory. So we did expect a bounce there. Now, when it was oversold real close to the 200-day moving average. So we was not buying UDOW at that time. But I can tell you, we bought UDOW. We waited a swing there. We traded UDOW. Actually, I believe we locked in 5% there. We traded UDOW. Let's see, every swing since it crossed and held this time. So SPXL, which is the leverage version of SPY, as you can see, SPY is bouncing up as we expected. I mean, if you look at some of the previous videos, we expected this. This is how we trade. We buy when it's oversold, sell or lock in profits when it's overbought. So far for the weekly charts, which is one thing we've been keeping an eye on, and we did a video on Sunday for the stock market update, that we are expecting probably a green October. So most of the monthly charts, as you can see, have pulled back from the highs. SMH is really drastic. So we called SMH's pullback in July 16th based on this chart. Still going. It has still ran a few percentage points up after I said it, so people were, thinking it was going to blow past that and never land. Obviously, that didn't happen. The pullback we expected happened, and if I'm a put my money where my mouth is kind of guy, I'm betting this rides out this trend, which right now the overall dynamic of the market, and what I mean by that is the daily charts to me don't look too hot. It looks like, the highs are getting lower and the lows are getting lower. That makes sense. Hopefully, some of you beginners, that makes sense. So this high right here compared to this high, see what I mean by the highs are getting lower, your lows are getting lower. That's not the kind of chart I want. So the kind of chart I want, or the kind that I've actually, just over the last couple of days, I want to say last week, we did a post. One reason you really should subscribe to the channel, turn on your notifications, share it with your friends, because throughout the day I will post some stock charts, things that's looking hot. This is BWXT. This is one I have in 3 different custodial accounts for my kids, our long-term investment account. I've been saying since January to buy this on every pullback, and we have been loading up the truck on every pullback, and it did really, really well today, and kind of expected. I personally, in my opinion, and all this is just for educational purposes, right? I'm just saying financial advice, little disclaimer there. But my personal opinion, BWXT will have a new trading range at over 100 next year pretty easily. You'd be up almost 40% right now from when I first called it back in January. And the market, just curiosity, what did the market do compared to that? This is why you hear me say a lot, if you just filter out the bull crap under the 200-day moving average, I got a saying, if the stock can't hold the 200-day moving average and stay and trend above it, I don't want to hold the stock. So the Dow Jones is down 8 or 2% within those 8 months. I was going to say, I know the semiconductors have been ripping, which is why So if you go to the monthly chart, I'm going to try to stop bouncing around here in a minute. Mine is just running to 100 different places. So I called, geez, right around here that I could see 120 being healthy for SMH. And this is why, because it's the 20-day, 20 bar moving average, I should say, 20-month moving average on the monthly chart. So it would be really healthy for it to come down, touch that. Now, will it hit the bottom of the Bollinger Band and be totally oversold? I don't know if that, I mean, look how many times that's actually happened in history. So this is, I mean, these are years here. 2010, 2011, 2012, obviously 2008, we know what happened there. But I doubt it's going to get oversold. Now, did COVID, everything got oversold? Definitely a time to load up on the monthly chart. But I could see it breaking through over the next, it may take 6 months. But I do see a downtrend for that. Right now, personally, I feel like it's a stock picker's game right now. Usually we trade UDOW and SPXL just based on the way the indexes look. But when they look like that, they're trending sideways and up a little bit, and you can capitalize on those swings and do really well. You don't even have to venture into single stocks. And when I'm trading leveraged ETFs, I tend to put a little more out on my first entry. And what I mean by that is if I trade an individual stock, so these are some of the stocks that I mentioned just last week. I mean, OHI was really a killer. Very good stock. I like the business model. You got 5% on that. We mentioned that. I'd have to look at the dates, but it was, well, I know it was Tuesday, 10/3, last week. Is when we mentioned all these. Now I think Dell, you'd be down a little bit. Not much. But I definitely put that on watch. It had a good spike after earnings, good gap up, and pulled back since then in the oversold territory. I mean, I can see Dell definitely having a nice little run coming up. This one right here, CCJ. Notice that on 10/3 as well, and I think it did drop 5% here. And that's why I say when I do single stocks, I will only start a position with 20% of what I want to trade. Now, if you're taking it slow, you're doing one trade at a time, that could be 20% of your entire trading account, okay? So I would have definitely averaged in here, averaged lower. So if I bought there, which I always usually like seeing it hit the bottom Bollinger Band, but hey, sometimes that don't happen. So if you would have bought there, for instance, 5% drop, you would have definitely averaged in somewhere right around here. Because I would have added, if I went 20% there, I probably would have went 25 to 30%. I mean, it was down 5% in the morning. I probably would have bought about 10:30 or 11. So let's say your average, and I believe that's exactly, let's go back and look at the time frame. This is the hourly chart. Yeah, 11. That was, and I said that just because that's the buying time. Okay, I'd never buy right at the open. Give it an hour to let the weak hands get out on a sell-off. I mean, sometimes it could keep selling off. But if I'm averaging my position lower, I'm usually buying about 11 o'clock on a open down like that. So, I mean, you could be up 3%. And ladies and gentlemen, this is all within 6 days from the entry. So just Sunday, these are two stocks that sent alerts out on. Stock charts of the week. They already opened up really well. And you got a possibility for another 5% run here. Wrong one. Another 6% run here. So these are runs and swings that can take anywhere from a week to 2 weeks. Now I know, let's say you're starting with a small account and you're saying, oh, well, if you're starting with a $2,000 account, you go 20% on that, it's $400. Let's say you don't have to scale in any as far as lowering your cost average, and it goes up 10% and you lock in profit. Let's say it takes a week or two. That is still, if you do the math, that is a 1% a week or a 2% a week swing on your entire account. It's 52 weeks in a year. You can do the math. Now that's all I want you to focus on, not the 40 bucks you made. I want you to focus on the percentage gain you made. Because when you build that account up to $1 million account and you're doing 20% entry on $1 million account, and that 200,000 just made you 20 grand that month or that week or that 2-week period. It's a big difference. So focus on your percentage points. Don't try to get rich overnight. Don't try to think you're going to turn $2,000, go all in, and no, what you do is you put yourself in a bad position to not being able to manage the trade. So stick, it's my personal opinion, 20% of my trading account max on single stocks. I mean, very rarely do I do 25-30% on the first entry. But if I'm trading leveraged ETFs, that's a different story, because I'm not buying a single stock. I'm buying an entire sector or an entire index, right? I'm buying either the Dow Jones, I'm buying S&P 500, or I'm buying, technology sector, so things like that. So you can definitely go maybe 30% your first entry, no problem. So let's take a look. Now we see what the market, what we're anticipating. We're anticipating a green October. We'll keep watching, see if I'm right. And we're doing that based on the weekly charts. So all the weekly charts are oversold on everything, right? And we think, regardless, I think SMH is going to play this trend line. So it may be choppy trading. But I think we play that trend line right into the 120 range. It'd be really, really healthy for it too. I know nobody wants to see another, let's see, 18% pullback. But if you look, this thing ran up 85% in a matter of 9 months. So trust me, it ain't just, at least my opinion, I don't think it's going to blow right by and hit 210 anytime soon. Path of least resistance is down on that one. And I think everything is pretty much going to play out the same way. You got your technology, triple Qs on the weekly. So the weekly stock charts, they're oversold and bouncing. But one thing you got to keep your eye on is the daily charts are getting into that overbought area. So, and as you can see, if you just draw a line right down through there, they're starting to hit that resistance as well. So it's going to be some choppy trading while the weekly charts pop up, get their little bounce. Daily charts kind of even out going down, and the monthly charts pull back. Now keep in mind, your monthly charts, you don't have to watch that often, right? Every bar is a month. Watch it periodically. Now my eye's on it pretty tight because how high the monthly chart is, and it's, to me, I find it interesting and want to see what I think is going to happen, actually see what happens. But let's take a real quick look at some possible charts, places you might be able to put your money. Once again, this is for educational purposes. Trade at your own risk. But so right here, I'm scanning. I got multiple bullish scans. This is one of my favorites. But we're just trading. We're just looking for the high cap 1,000, right? We can pick any watch list. Let me go to S&P 500. Tell you what, I'm going to open a scan first. I got, like I said, a lot of different scans. Ladies and gentlemen, whether you're a passive or active trader, you should know how to read a stock chart. You should know how to research and manage your own money. because you have the advantage. I mean, even Peter Lynch tells you that. You have an advantage. And when you know what you're looking for and you don't buy and hold crap, it's just trending down constantly in your portfolio. I don't know why I closed that out, but most of them kind of did line up with this anyway. You're going to do way better than the market. Let me finish doing what I'm doing, and I'll jump to what I was just about to jump to. So VST. This looks like a utility company, which is kind of stunned me for a minute because the utility sector, as you can see, has been hammered. Once again, it couldn't hold the 200-day moving average. That's what I'm talking about. I don't want it in my portfolio. But yeah, here's a utility company that is holding the 200-day moving average very, very well. And that's actually something I was going to get to in the Dow Jones or another ETF, is if you just took an ETF, let's say the XLU, right? And you opened up, click this right here, I can open up every stock. It should be pretty accurate. You might want to check your brokers just to make sure there's no updates. It ain't picking up on TC2000. Let me see, is that VST? So let's go down. So I don't even see VST and XLU, which is crazy. Because if I could have an index fund that just, as soon as something dropped under the 200-day moving average, like AWK, I'm out of it. Right? You're going to outperform that sector or that entire market. Just, I mean, look at these. Jeez. Probably everything in here that's actually holding us under the 200-day moving average. Man, they're all junk. I mean, look at this bloodbath right here. Jeez. People, I'm telling you, and if you get my book, Simplified Profits, I got a ton of examples in there. I'll go over examples all the time, especially when I see them. But that's one of my rules. If it's under the 200-day moving average, I stay away. If it can't hold the 200-day moving average, I don't want to hold it in my portfolio. Look at that, 50% in 1 year. You could have saved yourself 50% of losses. Well, you could have saved yourself 100% of your 50% losses if you would have just exited when it dropped under the 200-day moving average, which it barely was really able to hold it, besides a few swings. All right, let's go back to so VST is one, it's oversold. Do your research, check the PE, see what kind of dividend it's paying. I mean, this thing's been setting new highs, and it wouldn't surprise me if it continues to do so and we see it bounce back. I mean, you could see an 8% run within a couple weeks. It could happen. And it could also continue to drop. I mean, you could see it just turn around and keep going down, and that's when you would keep your average low, right? When it does pull back, I mean, everything swings. When it does bounce back, that's when you lock in your profits. Keep your average low as possible, lock in your profits. Blackstone's an asset management company. I mean, the chart's looking good. It's crossed over the 200-day moving average. It's had a couple cycles, right? Had a couple swings already. I mean, look, if you would have bought that swing right there, would have ran you up 20% in a month. Cha-ching. FTI, this is the one we just said on Sunday. We got CF, that barely just made it over the 200-day moving average not too long ago. Not enticing for me. Charter Communications. So we're starting to get out of the oversold territory. I had this filtered. And the stochastics are starting to get over 30. And that could be a possibility. But honestly, not seeing nothing today as far as that goes. VST would be a swing along with BX. These we've already called. So if I was looking to put a little money to work, that's a possibility. Ladies and gentlemen, one thing you'll know about me is I'm very, very patient of where I put my hard-earned money to work at. just because, for one thing, another reason to be extremely patient. Well, DIA is still bouncing. But I like buying when the overall market is oversold. You just get more bang for your buck. When you're shopping and the SPY, S&P 500's oversold, Dow Jones is oversold, Qs are oversold, SMH is oversold. When they're all oversold and then you do your shopping, oh my goodness, it's such a beautiful thing in your account, ladies and gentlemen. Seriously, I'm going to start doing these podcasts probably daily, just because there's really nothing to listen to out there as far as stock market commentary goes, digging into the charts, looking at technical analysis, and just keeping it simple. Because, ladies and gentlemen, this is really simple. There's nothing about this that's difficult. It's a simple strategy that works, and you can actually make a lot of, let's just say you can actually outdo the market very well, or make a lot of money, whatever you want to say. But if you haven't checked them out, go to Amazon, look up Simplified Profits. You'll see my book. There's 2 of them. Pick them up. One of them is how I actually handle my long-term account. One of them is actually how I handle my trading account. If you look back through some other videos, I'm kind of holding them up so you can see the screenshot of what the books actually look like. But it'll be under Anthony Calhoun. That's me, your host. And there'll be 2 of them. They'll have lines on them. Simplified Profits. We'll kind of break down what we do here in an organized manner. Because when I get on here, I'm just kind of shooting all over the place. I've probably said some things that might not even be sticking with you. You might not even know what I'm talking about. So that is, right, do some research. I'm going to try to do some more educational videos. It's just this whole layout I have here. This is TC2000 I've used as long as I can remember. And don't worry, that account number ain't going to do nothing for you. That's that's really just for, what happens when I change that? Yeah, that is a brokerage account. So I tried Interactive Brokers, which links to TC2000, and I hated it. I've been with E-Trade for, actually, since they bought out Option House, which now Morgan Stanley just bought them out. So please hit like, hit subscribe. We'll check out the markets tomorrow and see what happens. I kind of got an idea what's going to happen. I can be very patient, barely check the markets. I usually have just a bunch of alerts set. They go right to my phone. Let's see what I got. Yeah, I got alerts set on all the ETFs. So, ladies and gentlemen, you can be an active trader and still be passive about it. I can go about my day, not look at the market once, because I have alerts set up to tell me when all my scans go off, basically, on the ETFs. Not really bullish, but oversold over the 200-day moving average and being overbought. So if I'm really, really slammed and busy, I can go in, just got a text message that says buy DIA, meaning it's hit oversold and over the 200-day moving average. And of course, I feel like it's going to hold the 200-day moving average. I had a bad feeling about that based on the monthly charts, weekly charts, everything we just went over. So I stayed away from that. And then bam, I can buy what I need to buy. And then I'll get another alert. I'll get an alert every day it's oversold. So I can look at it, see how far my position's down, and see if I want to scale lower. See if that percentage drop that's down is the strategy that I went into that trade with. What I mean by that is every time you go in, you should already have a strategy in your mind. You're going to start with 20%, 30%, your trading account, whatever. And if you go down this much, you're putting this much more in, and you're scaling in at a certain percentage. All right, so every day it's oversold. I can check that and buy more if I need to. I'm going to get a text message every day. And then guess what? I'm not going to hear back from it until it's overbought, right? And it's the overbought area. Now I think I have mine set at 75 because there are times like this. So I usually, yeah, see, overbought's at 80, oversold is 20. I believe I got 25 and 75 as far as my alerts go. Just because sometimes it don't really hit those numbers, and you can kind of look at it and tell which way it's going, or you can go a little lighter in your initial buy just so you don't miss a swing up in case it doesn't go all the way oversold. Plenty of ways to make money in this market. I just hope you're making money. So turn on your notifications.